Here's our forward-looking statement. And let's quickly review our business model. So we utilize a three-pronged approach to our business model. Royalty generation is the primary driver to building our royalty portfolio. And what I mean by royalty generation is it's a modification of the prospect generator business model. So we go out and we acquire prospective mineral real estate around the globe, do some basic inexpensive explorations into those properties, i.e. we do very little drilling, it's surface or near surface explorations, and then we find signs of mineralization or outright mineralization enough to entice another company to come in and then buy that property. When they buy that property, they pay us with cash and or shares, and then we hold back a production royalty on that. We also garner annual payments from the new owner, milestone payments. So if they come to a pre-feasibility study or a feasibility study, or they initiate production, those would be examples of milestones, and those would trigger a milestone payment. Then also on a lot of properties, we get advanced royalties. So we're getting production royalties far in advance of the actual production on the property. And this is very key, particularly on like large copper projects, because the time horizons to bring a large copper project, like a large copper porphyry system, are commonly denominated in decades, not just simply years. So we want to start collecting royalties on those long before it ever goes into production. Then on any property that we manage the exploration on for our partner, we garner a 10% management fee. So we get a lot of payments along the ways too. And of course, that's key to our bottom line. One of the keys to our bottom line. Then we also engage in royalty acquisitions. When we can find those at favorable pricing valuations, but that's become rather competitive. But nonetheless, we still do find value out there from time to time, and we take advantage of that when we can. And then the last thing is strategic investment. So if we find a company with a property inside of it that we think stands a significant chance of producing a very outsized financial return, we may invest in that company directly, and then through our business acumen and our geologic intellect, we help them advance that property to a monetizing event and capitalize on that. A great example of that would be our Malmish project that we were involved in Far East Russia. We got in there in 2011. Through 7 years, we put $11 million into that, and then 2018, we helped effect the sale of that for $200 million, and our take on that was $69 million US, or about $90 million Canadian. So it was a great return on investment. All right. Moving on to our global asset portfolio, we're truly an international company. We're on every continent except Antarctica because we haven't figured out how to get royalties on penguins, but we're working on that. The Western United States is a big area of interest for us. So Nevada for gold, a lot of properties in Arizona for big copper. Also Idaho, we're quite active there now. A number of properties in Canada, primarily in the Westlake area. We're big in the copper belts in South America. And then our other biggest area of interest would be Fennoscandia. So Norway, Sweden, and Finland, with the bulk of those being in Norway and Sweden. In terms of geographic distribution and diversification, you can see that about a quarter of our projects are in Canada, and this isn't by acres or value or anything. This is simply by the number of properties or projects. In Canada, about a third in the U.S., then another 20+% in Scandinavia there, and then a variety of other jurisdictions. In terms of asset classes, about 58% of our properties are in royalty status, and then we have another 42% which are available for sale right now. So we're always loading the pipeline with more available properties for sale. And of course, every time we sell one of those, we generate a royalty on it. Since January of 2018 to current, we've been able to sell over 100 projects globally and created a royalty along the way on each one. In terms of cash flow, about 44% of our cash flow emanates from the production of copper and copper royalties, about a third of that from gold, and then about another 9% from base metals, and then about an eighth of our revenues are derived from those property payments that I just spoke about. This is our list of investors, operators, and partners around the world. This is kind of the who's who of the mining industry. You can see our investors include Franco-Nevada. We're the only other royalty company or junior company Franco-Nevada has ever invested in, and they've done that twice now. Newmont, Sprott, Stevens Asset Management, that's run by Paul Stevens, a very hyper-successful venture capitalist out of San Francisco. Adrian Day, he needs no introduction. He was just in the room here a few moments ago. Also, U.S. Global Investors, which would be Frank Holmes Group, and then two large hedge funds that will remain unnamed because they're sort of black boxes. And then operators, we have Zijin out of China, which is a huge multinational operator, Lundin, Nevada Gold Mines, McEwen, and so on. And then partners on properties, you can see South32, Franco-Nevada, Rio Tinto, Nevada, and so on. You can tell a lot about a company by who their top shareholders are. So we've got a lot of skin in the game ourselves. Our employees, management, and directors hold about 11% of our shares. You'll see Paul Stevens personally owns about 6.3% of our shares. And then if you scan down, you'll see just below where it says Newmont, you'll see Stevens Investment Management. That's a hedge fund that he runs there, so they hold another 2.7 shares. And then if you include Paul's sons, his grandchildren, his friends and allies in the Silicon Valley area, that number is substantially larger. And then, of course, one very key shareholder of ours and key ally to us is Franco-Nevada with 6.1% of the shares being held there. Undisclosed hedge fund, they're based out of Los Angeles and Toronto. That's probably the largest junior resource hedge fund extant. And they manage about $800 to $900 million. And they hold almost 5% of our shares. Newmont at over 4%. Sprott at 2.7%. That's Sprott Inc. out of Toronto. And then again, once again, Adrian Day. Taking a look at our share structure, we've got about 112 million shares outstanding and about 125 fully diluted. And the interesting thing about this is we've been around for 20 years now, and we've never done a rollback. So keeping a share structure that tight, I think, speaks volumes to how carefully we have allocated capital through that 20 years. Our cash position right now is about 21 million US. Debt is about 34 million. We just paid that down by $10 million in the past month. So we're looking to amortize that out further. And then working capital, we're at about 35 million US. Let's take a look at that circular chart in the lower left there to see where our cash flow emanates from. I'll let you go ahead and study that. I won't call those all out, but you see the bulk of that emanates from the production of copper and gold. A really key graph is off on the right there. This is our cash generation. You can see how the cash flow has ramped up substantially since 2019. And note all the way over on the right there, that is only for the first 9 months of 23 because we haven't recorded the fourth quarter yet. So I've been telling people, the CEO, David Cole's been telling people that this cash flow is coming. It's here now. Make sure you take advantage of this. The share price is quite soft right now as the overall conditions in the markets are very difficult in the sector. Take advantage of that. As Rick Rule likes to say, don't be used by the trends. Take advantage of them. So buy low. Okay, that's key. And then quickly, we have 6 producing royalties right now. 11 more in the development stage, and about 155 in exploration stage. But let's quickly take a look at the producing ones. Caserones, which I prefer to call Cacherones because it throws off about $8 million a year in cash right now, is in Chile. That's operated by Lundin Mining, who recently took that over and said that they're going to expand production there by 20 to 25%, and additionally dramatically expand the exploration in the area to increase the known areas of mineralization around the mine and then outside of the mine on property that they control to find even further resources. And currently, the projected mine life there is 28 years. So this is going to be a long-lived cash cow for us. Timok in Serbia, this is key to us. And this is operated by Zijin. These guys are pulling metal out of the ground like crazy. They're very, very aggressive. And this is currently paying us out about $4.5 million a year. We look for that to ramp up also. Then Gediktepe in Turkey. This is paying us out very nicely. This is currently a gold and silver mine. And as they mine off that oxide cap, they'll get down into a VMS ore body, and then that will turn into a polymetallic system. That'll go on for another 10 to 12 years. Leeville, this is on the Carlin Trend in Nevada. That's a 1% gross smelter royalty that incorporates portions of 4 Newmont VRIC joint venture mines, plus 2 other mining areas. This is currently paying us out about $2.5 million a year, and that will be paying for long after most of us are off this earth. So that's a very long-lived asset. Then Balya in Turkey, we have a 4% uncapped, unviable NSR there. This is a lead zinc silver mine. This has just started production in the past 9 months or so, so they're still getting ramped up, and they had some metallurgical challenges they had to work through on startup there on our side of the district. That's behind them now, and we look for this to ramp up dramatically in the next couple of years. And currently, that's only paid us out about $750,000. But like I said, we look for more and more cash flow coming out of that in the future. That's all I have for you today. Thank you so much. Enjoy the conference.